Today we're going to talk about the 5 ways to analyze stock charts. There's so much to go over, but today I've got 5 things I really want you to focus on, and every single time you bring up a stock, every time you bring up a chart, I want you running through this list. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to like, subscribe, and share these videos with your friends. And also, if you're on YouTube, make sure to ring that bell to be notified as soon as we drop a new video. We go live. I go live every day, 8:30 Eastern for pre-market prep. Matt's doing a mini podcast. Steven and I still do the long form podcast. We do tips and tricks videos. Share with your friends, ring the bell, and drop us a comment to let us know what you really like about these videos, or heck, what you don't like. So, all right, let's start. So what we're going to start with very first is, understanding what is a candlestick chart, okay? And this might be a little basic, but a lot of you might, fire up, whether it be StocksToTrade or another chart package. And I mean, obviously you can look at this ticker and you can kind of see in the morning the trend was up and then we're fading back. And right now we're hugging VWAP into the 2 p.m. window, by the way, which if you're on pre-market prep, you know what I'm hinting at there. But you can see the trend, you see what's going on, but you might not necessarily know why is one candle green, why is one red, what are the little wicks on the candles. So let me just give you a quick brief introduction. So any candle that is green, that means, so I'm looking at a 1 minute chart, a 2-day 1 minute chart. So each candle represents 1 minute of time. And if it's a green candle, that means the on that minute, so from the beginning of the minute to the end of the minute, that stock was higher than the beginning of that 1 minute candle. So that's a green candle because it upticked, as we say. Then if you've got a red candle, that means at the beginning of the minute, say it opened at 10 and this candle closed at 9:50, that's telling you that candle closed red, so then the candle would be denoted red. And then you can kind of, the idea is you can kind of get a trend here. I mean, you can see, especially into the 9:45 window, one of my favorite times of the day, you can see this thing was crazy bullish, just 5, 6, 7, 8 green candles in a row. That tells you that, man, something's going on here. Vice versa, the momentum flipped out of the halt, and you can see, 15, 20 red candles in a row. So that gives you that read on what the real trend is. Then the wicks denote the high and the low within that time period. So let's say again, candle opened at 10, closed at 10:50, but within that minute, it went down to 9.75 and went up to say 11. You'd have a little wick on the bottom, denoting that 25-cent downtick, and then you'd have a pretty big wick on the top because it pushed up $1. So that also shows you the range within that period. So that's why you get the wicks. That's why one's red, why one is green. And then the other thing I get asked a lot about on the volume candles, and technically this is, and this is a little tip. A lot of people misunderstood. Technically, the volume bars, they aren't candles. They're actually volume bar chart. And that, I think, trips people up because they'll see the red and the green and they think that's denoting something. The color simply matches your price action candles. JFIN's going to rip at 2 p.m. here. But anyway, so don't read too much into the volume candles from a candlestick perspective. It's just a bar candle representing the volume within that time frame, and then it's red or green based on the price action candle. So, all right, there's a lot to know about candlesticks, but that's your 90-second introduction and just understanding the basic mechanics. So now that we understand how candlesticks work, we're going to look at support and resistance levels and areas of interest. So when we talk about support and resistance, that's just areas where the stock struggles to break out, which would be a resistance level, or struggles to, or if you're long, you wouldn't say struggle, you would say holds. If it's holding a level to the downside, that's your support level. So again, going back to JFIN, let me drop a couple lines, and I think that will maybe help you see a little bit. So keep in mind with technical analysis, we're doing a lot of averaging. I don't think I created this term. I probably borrowed it. But, candlestick charting, support and resistance is a art, not a science. So we're not looking at per pennies. We're kind of averaging. So for me, I see support through the middle of the day here at that 950 level. Yes, it dipped as low as 920 and, didn't quite touch 950 here, but I'm basically averaging that area. And I think you can kind of see where it bounces and holds, and you can see just into 130 it held as well, not surprisingly at a whole dollar, half dollar. So 950 is that support level. That's that area that's holding where the bidders are stepping in to support the price of the stock. That's that area you're going to risk off of. So support, that's when we think about the bid support holding the stock up, where, I like to joke about Gandalf in Lord of the Rings, saying, you shall not pass. That's the buyers holding this stock up. Then that resistance level, I see at 11, and I think you could probably kind of see that too. It did blow through that in the morning, but then we rotate into the afternoon, and right here at 1150, couldn't break that area. Then it came close at 1245, couldn't break it. Got through it at 1, but then failed. Got through it at 120 and failed. And then here we are kissing up against it. And you can even see that kind of live as I've been talking. You can see it keeps hitting that 11 area, and it just can't get over that. So now, with these lines, basic trend lines, support and resistance, we've now got a plan. So if and when, and it may happen during this video, we'll see, if and when this really breaks through 11 with high volume, you're probably going to see a good spike, and then we're either going to risk down on VWAP, that's that green line, or if you've maybe got a little bigger risk profile and a smaller size, you could even risk all the way down to 950, which is a pretty big stop, but if you got small enough size, these stocks move fast. You can see this was a $5 stock this morning, so giving it a little bit of range, maybe not a bad idea. So use your candle or use your trend lines to write that plan for you. You hear me say plan. A lot of that is based on support and resistance level. So next thing we always want to know when we bring up that chart, what's the 52-week high? And, again, I always try and give you the why. The reason we care about that is most people, there are people that bag hold stocks for years. I don't quite understand why they would do that to themselves. But, most traders are going to give up on a stock in under a year. That's why I like to really use that 1 year, 1 day chart, or they're going to give up 13 months or 14 months or something, But the reason we care, and JFIN is a good example, you can see this stock ran back in the summer, and it did go up way higher, but ultimately on the day close was at 1050. So that's our 52-week high. So now you got this big move today. This is telling me, especially in the afternoon, everyone's green. So at this point, everyone that bought in the last year, unless they had a terrible fill on that big wick you see, but basically everyone's in the green. So now I know, based on the afternoon, the stock breaking out, momentum, crazy volume, there's a good chance these long-term holders are going to start adding because they're back in the green. They're excited. They're like, hey, 9 months later, 10 months later, I turned this loser into a winner. The natural thing to do, and maybe you do this, you start adding. So that means I've got even more buyers stepping up to push this stock higher. We love to see those day highs, breaks of resistance, 52-week highs, 5-year highs, even all-time highs. In the market we're in right now, it's not rare to see stocks break out to decade highs. Then the next thing we're always going to look at is the volume versus the average volume. And what I use is down here, in StocksToTrade, we've got the 60-day average built in. That's always the indicator I'm going to look at because to me, that's enough of a snapshot, and you can customize it. You could look at the 1 year average volume. You could look at the 6 year average volume if you wanted. But what I care about is the 60-day average because most day traders have pretty short attention spans. And you can see, again, with JFIN, 290,000 shares a day. That's the average, 300,000 shares a day. Where we at today at 2 p.m., 116 million. Okay. and we still got an hour and 45 minutes left in the day. So that is exactly what we look for unusual volume. So keep that in mind. That's exactly, you remember, you need more buyers, you need more price action to push this thing through. more buyers means a better likelihood that the stock can spike. And then the last thing we're going to look at is that previous day close, or the red to green or green to red line. You know, that's that area where, especially when these stocks that have been running for multiple days, when they go red to green, they tend to spike. SLGG is a good example of this. This is a esports play that's been a crazy runner for several weeks. You can see it gaps red this morning, opened down below 760, opened down to 730, but then look at when it goes red, basically never looks back all the way up to 10. So quite the move on a hot sector play, esports. You can see it's trading well above its average volume. That's that previous day close, aka the red to green or green to red line that we look at in every single stock. So there you go. It's kind of your basic way to run through a stock chart. Now, we didn't talk about any fundamentals here, okay? I was purely talking technicals, and that is what you always want to start with, in my opinion. And we do plenty of plenty of videos talking about fundamentals. But in my opinion, as far as I know, every day trader, every professional day trader, we always start with the chart, with the volume, support, resistance, because at the end of the day, and this is a mistake a lot of newer traders make, at the end of the day, it doesn't matter how good the news is, okay? The company can say they're going to cure cancer, but if there's too much resistance on the chart, too many bag holders, if there isn't unusual volume, it's going nowhere. So always start with your technicals. Then once you find that good setup that's in a hot sector, unusual volume, all these things, then go over to the fundamentals. See what are they making money? Do they have sales? Do they have a future? What's their technology look like? And then combine those, and that's how you come up with a solid trade idea. So, all right, everyone. As always, drop me a comment. Let me know what you think of these videos. We try and give you a little bit of everything. Always want comments on this specific video. And then also, if you're looking for something else, hey, we put out a ton of stuff. Would love some suggestions. Drop them in the comments. And then, if you're looking to take your trading to the next level, check out the StocksToTrade team. It's a mentorship program. I do 2 webinars a day, every single day, roughly 45 minutes long, sometimes an hour. Sometimes I do 3-hour webinars. But it's a great way to learn. Check out the StocksToTrade team, and I look forward to working with you.